All right, folks, and we are live. Hey everyone, my name is Ryan and you are watching Crypto Grinders. Now, in this episode, I'm going to be talking about asset-backed trading. So, what's the whole idea and concept about asset-backed trading? Why is it a big deal? And why I feel that it's going to be huge and a very, very big business in the future. So, this is the episode that you want to stay tuned because you may be someone who already has these assets or these collectibles, and you want to be able to find a marketplace that you can trade it, and at the same time it opens up a lot of opportunities. So I'll be sharing my thought process on how this is going to evolve, and I'm going to be sharing with you from personal experiences, and who knows, this could be a business idea that you could set up, and at the same time, if this business actually takes off, it's already happening right now. Okay, even as we speak, there are people that are already starting to develop all these things in the space, although it doesn't look entirely like how I'm going to be sharing it in terms of the concept, but you'll get the whole gist of it, and hopefully we will see more of these things, or at least these asset-backed trading marketplaces and even representations of it as a synthetic item or as a token, right? Because we are also part of the crypto space. So let me just share with you how I started formulating all these things. So first and foremost, we all are very used to trading we are very used to trading crypto, okay? And crypto is either as an asset or a crypto asset, or it's a cryptocurrency. From then we go to an exchange. We either buy it with fiat, where you buy your Bitcoin, Ethereum, Litecoin, or whatever coin you want, right? With fiat, and then there is this digital representation of it. Now, the problem with that is that this value is speculative. There is no way to predetermine how much this particular token is worth. So why am I talking about it in such a manner? So I was watching Warren Buffett, Charlie Munger, and Bill Gates on CNBC. It's a very old video, by the way. So it's not you can go and search for it, right? What are Warren Buffett's thoughts on Bitcoin? What are Charlie Munger's thoughts on Bitcoin? And I think there are those who are extremely critical about the space, and they have certain validations that I agree. I really agree with them, because not because they are billionaires or not because they are business owners or whatever, but I just feel that they do have some merits and definitely a lot of credibility and reputation in the space when they mention these kind of things. So one thing that Warren Buffett actually mentioned, that when he criticized or formed an opinion about the space, people in crypto kind of got offended, right? They felt like they took it personally. But he has a lot of merit when he says that, where's the value behind it? How do you determine the value other than the fact that someone else is willing to buy it at a higher price on an exchange? To be fair, he is extremely accurate and correct, because when you look at the way he invests in companies that can produce something that people want. So in this case, right, we have this argument that, no, that's not true, Warren. There are people who want Bitcoin. There are countries that have financial systems that are not as solid, and they would require a blockchain or distributed, decentralized, network where you can transact forms of currencies or cryptocurrencies, right, more efficiently. Okay, but then it goes back to, what is the production from that? Like, if I hold a Bitcoin right now, if no one else is going to be able to buy, or at least there's no way that I can determine the value of this particular cryptocurrency, and if I don't have a place to transact it, so prior to all these exchanges coming out, how do I actually determine the value of Bitcoin? There has to be an exchange, there had to be a marketplace. Okay, so because of the accessibility these days, it's so much easier for us to want to buy and sell. But his main key point is, where's the production? So after I buy this Bitcoin, am I able to create more revenue from it? Is it possible that it could, for example, produce certain additional gains where I don't have to sell off the main asset, and I'm able to live off certain residual income from it. And the clear answer is no. Same thing, gold is the same thing. So gold is the exact same physical representation that we know till today. If you buy a piece of gold, there's no way that it's going to form any kind of income whatsoever. But the difference is that gold, you had to mine it, you had to create an infrastructure around it, you had to go and slog for it in some way, right? Or you had to be a company that owned or hired miners that had the tools, and of course they had to have the drilling equipment, so on and so forth, to go and mine the gold. And gold, for now, at least more than many centuries, has already been recognized as a form of hard currency, a commodity, a precious metal, because it has stood the test of time. Crypto, on the other hand, or at least Bitcoin. Okay, now we're talking about Bitcoin. Let's not go too far off to altcoins or whatever. Let's just talk about Bitcoin first. So Bitcoin right now seems to be that digital representation or a digital expectation of a currency or a digital gold, as they say. But when you mine it, okay, so to be fair, miners dedicate a lot of resources and money, right, to go and mine the digital currency. But do you think that they would bother to mine it if they didn't believe in what it can do, or it didn't have a price? Let's just be very honest, people are in this for the money as well. Okay, no one is going to dedicate time, effort, resources into something that has no value. Okay, so as the infrastructure is being developed, and at the same time when more merchants and you are more willing to accept Bitcoin, it becomes more valuable over time. Now, the next thing is he didn't understand, or at least he doesn't really want to go too in-depth, where there are other companies that are offering their own representation of their business. Now, for him, he's very straightforward. Warren will only invest in companies that he can own and control. Okay? What the rest of us, unfortunately, don't have that level to own a company and control it. So when you own a token, as I've mentioned before many times in my videos, tokens are not even equal to equity. Okay, they're not. Okay, so what happens is that companies who issue tokens want to at least give a certain level of ownership. Where you own the token, it means something. So it's either that you can buy something, you can get a certain benefit, whether is it through the platform when you use it, or you can benefit from it as an investor, okay, or even benefit as a trader. Okay, it doesn't matter. Once that has been established, you can even have voting rights. When you're an equity holder, you do have voting rights, but there are the retail investors who have stocks that have certain voting rights. But at the end of the day, you're looking at, when you talk about real voting rights, okay, real voting rights, solid voting rights, you have to be part of the board of directors, where you are having a decent stake in the company for you to even be part of that meeting, for you to even voice your opinion. So to be fair, right, it doesn't really matter that much. Okay, it's all these little arguments that I think it's more of perspective. Okay, so when I was listening to it, I was like, okay, he does have his points. And what if you started investing in companies, okay, hear me out, in companies that don't mind implementing a token, okay? Don't talk about blockchain first. Let's not talk about blockchain. Enough of all these kind of blockchain tech talk. Let's talk about just a token, a representation of what they own. So right now, let's say you are someone who loves Supreme. Or you know what? Let me just give you a real visual example. So my wife, okay, loves buying Hermes bags, okay? So to me, I think of things in a very standard man, like a guy, right? Like a little like a guy, where I look at this and I'm thinking, okay, why is this bag even worth this price? Okay, and Hermes obviously has been around for a long time. Okay, they make one of the best bags with the best designs, although very simple. and it's worth a lot. But my question is, how do I know that why is this bag even worth 37,700? Like why? Like why is it even worth that much? To me, I wouldn't know that, right? It is based on what this website is telling me. So right now, if let's say Hermes created a token, okay, to represent each bag. So this is where the asset back tokens start coming into play, okay, which they are non-fungible. I want to make sure that this website, okay, this website is obviously they are selling the retail. They can bring in brand new or new, okay. So to me, I'm like just thinking, okay, why is this bag 37,700 when the official Hermes site, okay, the official Hermes site doesn't even have a listing. It doesn't even have a price, because if you want to own an Hermes bag, so if you want to own an Hermes bag, if you want to own an Hermes bag, you cannot just simply go to the store and expect that the sales agent, okay, will sell it to you. You have to build a record. You have to buy quite a number of other things before you can own an Hermes bag. Alternatively, you can go to the store like the store that I just showed you and buy it off there. But my question is, what's the actual price? Okay, what's the actual price? And if I'm none the wiser, I'm someone who is I'm inexperienced. I've never bought an Hermes bag before. How do I know that that is the legit? How do I know that that item is legit, right? I wouldn't know that. It could be, for all you know, it could be a knockoff. It's very hard to tell, by the way, because these days knockoffs are very, very easy. And by the way, this applies to your Supreme brand. It applies to anything, Nike shoes, your art collectibles. A lot of all these things, right, could potentially, right, be fake. So the whole idea of why I feel that asset back is going to be big is for the fact that Warren did say, as long as that you can produce something from it that people want, and at the same time there is a value to it. So say for example, back to the Hermes bag example, if let's say I know from the retailer to where it is on the secondary market, there are only 10 pieces. Okay, so there are only 10 pieces. It retails maybe for 25,000. But because you don't have the status, you probably have to buy it off the secondary market. It applies the same thing to Supreme goods, where Supreme can sell it off at the store at the retail price of maybe a few $100s, but on the market, the secondary market, it can go for a few $1,000s because of that scarcity. It works. Now, how do you know that this is going to be legit? So hence the non-fungible tokens. So if let's say this company, say Hermes, starts implementing the NFT or the non-fungible tokens, what happens is that, okay, they are going to state that this is legit, this is the serial number, there's no other person that will own this except you. I was like, okay, cool. So at least when I buy it off this stall, okay, and obviously the person who owned the token, right, will then have to sell it off to this website, wherever, okay, it doesn't matter, any kind of online store, and that token is transferable. The moment it transfers the ownership, I will know for a fact that it's legit. I can track the history of where it actually came from. Did it actually come from an Hermes retail store, okay, and it came from Hermes? That's all I care about. So if you tell me if it's worth fucking $37,000 and it's really only 10 pieces in the world, okay, you can buy. Because right now, I wouldn't know. I really would not know. Let's assume you are very new, you want to surprise your wife, okay? So same thing. Next thing I'm going to show you is the Rolex Daytona, which is one of the greetings constant. So right now, if let's say the Rolex Daytona, okay, so basically, let's say I am someone who likes this watch. Okay, now here's the part. I like this watch. I own it. Okay, I own it, and I want to actually sell it off. So this is scenario number 2. I actually want to sell it off right now. So once let's say Rolex has this asset-backed token up and running already, I want to sell it off for liquidity. I go and find an exchange that is able to accept this token because it knows that I am the owner of this watch. Right now, I want to sell off this watch to release some liquidity to do an investment. Say, for example, I wanted to buy or participate in a particular investment that is available on that exchange. This exchange, okay, recognizes that this Rolex Daytona is worth $38,000. Okay, let's say it's worth 38,000 Singapore dollars. Okay, and what happens is that right now, based on their risk criteria, my membership with the exchange, obviously, okay, my credibility, so on and so forth, they will assess it and say, for example, if you are willing to release this watch and put it under their holding, okay, we will release an amount of liquidity to you, because I know for a fact that you have this watch. You, Ryan, you are the owner of this watch. I can validate that because you bought it from Rolex, okay, and you are right now the owner. But you don't want to sell the watch completely. But in the event that you know, your investment turns south or whatever, okay, we will take your watch from you. And from that token, that will be that representation, because everything is about speed. Right now, if let's say I wanted to sell off my Rolex watch, I would have to go to a secondary, a secondhand watch retailer, and this secondhand watch retailer will usually take it at a 30% cut, okay, to give you cash, or it's on a consignment. Okay, consignment basically means that they will put it on the store, put your watch up for listing, and then if someone shows interest and decides to buy, they'll take a small cut, anywhere from 5 to 10%. Usually it's up to 10%. Okay, but it's still better than them giving you cash up front, because they're gonna discount it by 30%. But in actual fact, the market price of a Rolex Daytona actually is very, very high. It's actually a very valuable watch. It doesn't matter what kind of Rolex Daytona, it's usually always retains its value. But sometimes under certain circumstances, let's say, for example, like I mentioned, I want to participate in an IPO sale or an ICO sale, and I know that I'm going to have this opportunity to 5x or 10x my money. Okay, let's just say. And right now, the liquidity, I don't have much cash on hand, but I have my assets. I can now release my assets on this exchange that is willing to take it from me. Okay, take my asset, or at least the digital representation of it. So right now they own it on paper, and then after they release the liquidity, I can now participate. And if I make money on my on the investment, I can buy back my watch, of course, at a slightly higher price than the amount that they gave it to me, or I can actually just buy it back at the same price that they were willing to lend it to me, or whatever is the mechanism. So you see, this is scenario number 2. Right, now scenario number 3. Let's say if I was someone who wants to own a piece of art. Okay, I want to own a piece of art. Same thing, I do not know whether this piece of art, how much is it actually worth. So what happens is that these asset-backed exchanges, right, there will be a valuation or a valuer, and these valuers will all come together and value this piece of art. Now, the beauty and difficulty of it is that most people do not want to have these kind of transparencies. Sorry, it's not even a beauty, sorry, it's a problem. It's a problem. Because right now, right, these pieces of art are either used as a way of transferring money around large amounts, okay? So it's not just Bitcoin, guys. It's basically, it can be anything. Because right now, how am I going to tell whether this piece of art is worth $10 or it's worth $1 million? It all depends on what is the transaction and who are usually doing all these transactions. The marketplace in this case is usually Sotheby's, or some kind or Christie's or whatever, right? These are the auction houses, and the auction houses, when they make a successful sale or successful auction, they take a cut. Same thing. Don't you think that sounds exactly what DEXs are going to be built for? Don't you think that it sounds pretty familiar of why crypto exchanges can potentially function this way? Now, I hope that I got you all excited, But there are certain things that we have to take note of. One, we need to look at the licenses involved in those various assets that existingly run today. What are the regulatory restrictions? And obviously, how do you maintain the security and the transactions between the person who holds the asset to the marketplace to the actual buyer and seller? Everything must be well thought out, right? So are the existing exchanges that we know today going to create subsidiary companies that function in this manner? Or could there be companies that are already in the midst of thinking about such things, and they have already the infrastructure, or already they want to implement it to their existing infrastructure and allow all these things to happen? So from there, right, you are now able to even come in and say you want to own a piece of the Daytona. Okay, let's say you talk about the really vintage Daytona. You don't have the money to buy the whole thing, but they are now opening up this asset to you as a retail investor. Okay, obviously, maybe once you qualify to a certain level, they want to give you a piece of that appreciation in price. Okay, and if that happens, okay, and like I said, back to the same thing, I've been validating the whole episode where you know it's from Rolex. You know that it came from Rolex. It's now sitting on this marketplace that offers that opportunity for you to own a piece of the Rolex, because you don't have to own a whole Bitcoin. You can own a fraction of the Bitcoin, and if it appreciates in price, you can sell off that fraction. Doesn't that apply to an asset as well? So you can now say that I own a Daytona, okay? I own a Daytona, but I don't actually own the physical, the whole piece. I don't own the whole piece, but I own a fraction of it. It applies to property, it applies to art, it applies to anything that is of value. You see? So that's why the asset-backed tokens, right, are going to be very, very popular and definitely in demand. Because not every, you see, now you must be thinking, Ryan, if I have the money, right, why don't I just own the actual asset? Back to it. If you even understand risk management, if you understand the importance of cash flow, okay, sometimes owning these assets come with certain problems. Say for example, if you own a property, am I right to say that you have to clean it? You have to find tenants to want to rent it. You have to pay property taxes, so on and so forth. A lot of things that you don't see. Sometimes if you own a watch, am I right to say that you have to go and clean it, you have to maintain it, you need to keep it safe, you need to put it in a watch winder. There are all these headaches. What if there are companies that specialize in maintaining these pieces? Okay, they take good care of it. They are in charge of that. All they are doing is creating a service where you can own it, but they hold the asset. Alternatively, if you don't buy into all these kind of ideas, obviously you can own it, but you will have to know how to service it. You will know how to handle everything. Okay, it's part and parcel, right? So same thing. These are the things that are going to be very, very popular. It may not come together today, and you obviously, and I don't think we have this kind of systems yet, or these kind of marketplaces yet. Sure, there are already existingly carousel, carousel that functions in such a manner. I'm sure there are other websites that function in such a in such a manner as well. But it's not exactly the way I'm thinking. So back to it. I feel the most excited where you can release that liquidity for you to participate in something else very quickly. So say I already own the Daytona, or at least a portion of the Daytona. The Daytona actually increased in price. Right now, I want to release the value, and from then I want to invest in another asset class. What happens is that you are now opening up the access of how things are going to be owned. You're disrupting the existing system, right? It's not just for the rich. It can be for everybody. It just depends on how will the marketplace define everybody, right? Obviously, you have to be a verified user. You definitely will need to provide certain income documentations or whatever, details about yourself, so that they know that, okay, if you are going to own it, or I can trust that I can release liquidity to you, okay, we are definitely able to extend certain things. And it bypasses a lot of things, okay? It bypasses the banks, right? And that means companies who are cash rich can actually function in this manner, and they can provide lending services. Okay, and you can actually borrow from these companies in that sense, right? And it all works. It kind of works out, especially when you know that there are opportunities for making money. You don't always have to rely on the banks these days. Okay, so this is kind of like my thought process. I mean, there's no particular crypto that does this, right? Obviously, the non-fungible tokens that we kind of know and think of are like CryptoKitties. I think, if I'm not wrong, Decentraland does a little bit of all this, but it doesn't function the way I'm describing it at the moment. Okay, and before I forget, there is also the futures market that can be added into this play. So let me go back into my Rolex example. So let's say my Rolex has a 40,000 value, okay, and I want to only take out 20%. I only wanted to take out 50% of that value, okay, and I'm already putting my fungible token for as validation that I'm the owner. Okay, so everything is done, and the exchange is willing to give me 20,000 in terms of credit. I take this 20,000 worth of credit, I invest it, and I can even potentially buy a futures contract on my Daytona because I love my Daytona so much. I do not want to sell it at a loss or whatever. So I can even buy a potential contract for 6 months down the line or 1 year down the line, that in the event that my Daytona does appreciate, I can long my Daytona's price, and I won't have to buy it back. I can buy it back at the same price, or as it appreciates, I can sell off that futures contract, right, and allow myself to actually gain as my Rolex Daytona appreciates, something like that. So these are the things that could potentially happen as well. It doesn't always have to be a company. It can be an item, right? Because as long as there's a way to validate the price. So back to the Hermes example, how do I know that bloody bag will be worth 20,000 6 months later? Because it wasn't in color, it wasn't a fashionable color, or pink wasn't in anymore. You see, I wouldn't know that, right? But if there's some way that we can validate the price and the market movement, the price action and the price discovery, right? That's when everything starts to get very interesting. So I hope that this episode isn't that much of a ramble. For those who are a little bit more organized in their thoughts, I'm sure you have your ideas all starting to flow, and maybe you can kind of describe it in the comments below. You kind of understand where I'm coming from. Like I said, I'm open to even invest in companies that do these kind of things. I am very excited for it. It's just that I can't piece everything together, and I know that the property sector doesn't function this way at the moment. Okay, it doesn't function this way. And what this does is you don't have to go through the banks, right, anymore. You can actually pledge your property and release liquidity. And at the same time, if you anticipate that the property market is going to appreciate in the next 6 to 12 months or even 5 years from now, you can buy options for your property. You can even buy futures contracts for your property to do some hedging. You see, these are the things that potentially can be done. It's just a matter of whether or not the country where this marketplace is operating will allow that particular exchange to function in such a manner, because obviously everything is about control. Because right now, banks are the ones that are facilitating the lending. Okay, brokers will then help to take a piece of that when they recommend loans to the banks. Okay, that's kind of like how it works. You want to list your property, you go through a broker. Simple as that, right? But what if there are companies that are willing to take on the risk, right? Who have a way to manage that and underwrite those risks, and they start being creative. And like I said, license and regulation. It's not so easy to overcome these hurdles, but potentially they could do very, very well in the future, and may happen in the future, because right now you see all this crypto trading, it's already happening, guys. If let's say the crypto kitty, right, is worth, I don't know, $2,000 today, 6 months later, there's still demand for this crypto kitty, and this crypto kitty is going to be worth $4,000 or $5,000. And it is one of a kind. It's very unique. It's very hard to get. And somehow there's someone who wants it. I mean, I wouldn't want a digital kitty, but I'm just saying, okay, giving you that example. What can you do? What more can we do with this space? This is what's getting me excited, guys. So anyway, that's all for my episode. It's a little bit weird, the timing, because my kids are now driving me crazy. The little one is like all the time wanting to be with me, and right now she's asleep. So I'm now able to kind of do this video and share my thoughts with you guys. Anyway, if you felt that this video was helpful in terms of its concept, give it a thumbs up. And like I said, if you feel that asset-backed trading will actually be big in the future, right? Comment below. I want to hear more from you, or if you have already ideas, or if you've actually seen these kind of implementations in your country, let me know. I'm very interested to research more about it, especially if it involves the luxury sector, property, art and collectibles. I'm interested, right? And the more the more information that the community brings together, and we kind of have this mind share, the faster we all grow and the faster we all can potentially make money from it. Anyway, give this subscribe to the channel if you haven't, and of course click on the notification bell if you want to watch more of my live streams, guys. Thank you so much for watching. See you in the next stream. Bye bye.